You're a successful freelancer. You make good money. But when you try to get a mortgage, rent an apartment, or apply for a loan, suddenly you're treated like you don't have a real job. Sound familiar? The traditional system wasn't built for freelancers. Lenders and landlords want pay stubs, employment letters, and W-2s. Things you don't have. But here's the thing. You can prove your income. You just need to speak their language. In the next 8 minutes, I'll show you exactly what documents to prepare, how to present them, and the strategies that actually work. Note: this information applies to US-based freelancers and self-employed individuals. Welcome to the Freelancer's Wealth Blueprint. Let's fix this problem. First, let me give you a different perspective. Stop thinking like a freelancer for a moment. Think like a lender. What does a lender actually want to know? 3 things. 1. Do you make enough money? 2. Is that income consistent? 3. Will it continue? That's it. They don't care about your job title. They care about risk. Your job is to reduce their perceived risk by proving those 3 things with documentation. Once you understand that, everything else makes sense. Let me walk you through the 6 documents you need to have ready. Document 1. Tax returns. Your tax returns are the gold standard of income proof. Specifically, your Form 1040 and Schedule C, if you're a sole proprietor, or your business tax returns if you have an LLC or S-Corp. Lenders typically want 2 years of tax returns. This shows your income history and trajectory. If your income went up year over year, that's a great sign. Here's an important tip. Your adjusted gross income is what matters, not your gross revenue. All those deductions you took to lower your taxes, they also lower your provable income. This is the freelancer's dilemma. Great for taxes, not great for loan applications. Some freelancers strategically take fewer deductions in the year or 2 before applying for a mortgage. It costs more in taxes but results in higher provable income. Document 2. 1099 forms. Any client who paid you more than $600 in a year should send you a 1099 NEC form. These are third-party verification of your income. The IRS got a copy, and so did you. Collect all your 1099s. They back up what your tax returns show. If a lender questions your income, 1099s prove that real companies paid you real money. Document 3. Bank statements. Bank statements show actual cash hitting your account. This is powerful because it's real-time proof, not just what you reported on taxes. Most lenders want 12 to 24 months of bank statements. They'll look at your deposits and calculate an average monthly income. Critical tip: have a separate business bank account. If your business income is mixed with personal transactions, it's a nightmare to verify. A dedicated business account makes everything clean and professional. Document 4. Profit and loss statement. A profit and loss statement, also called an income statement, shows your revenue, expenses, and net profit over a period of time. If you use accounting software like QuickBooks, Wave, or FreshBooks, you can generate this automatically. If not, you can create one in a spreadsheet. This document bridges the gap between your last tax return and today. Tax returns might be 6 to 18 months old. A current P&L shows what's happening right now. Document 5. Contracts and invoices. Signed contracts prove future income. If you have a retainer client paying you $5,000 per month, that contract demonstrates ongoing, predictable revenue. Paid invoices prove past income. They show completed work and received payment. Together, contracts and invoices tell a story. You've been paid in the past, and you have income lined up for the future. Document 6. A CPA letter. A letter from your accountant or CPA can work wonders. It's a professional third-party vouching for your income. The letter typically states your average annual income, how long you've been self-employed, and that your business is in good standing. Not all lenders require this, but having one ready can push a borderline application over the edge. Now let me tell you about specific situations. For mortgages, the requirements are strictest. Expect to provide 2 years of tax returns, 2 years of 1099s, 12 to 24 months of bank statements, a current profit and loss statement, and possibly a CPA letter. Many lenders also want to see that you've been self-employed for at least 2 years. If you're newer than that, you might need a larger down payment or a cosigner. There's also a special type of loan called a bank statement loan. Instead of tax returns, the lender uses 12 to 24 months of bank deposits to calculate your income. The interest rate is usually higher, but it's an option if your tax returns don't show your true earning potential. For rental applications, landlords are usually more flexible. Most will accept tax returns, bank statements, and proof of current clients. A CPA letter can also help. Some landlords will accept a larger security deposit, like 2 or 3 months' rent, in exchange for less documentation. If your income is strong, offering extra deposit up front can close the deal. For auto loans and credit cards, these are generally easier. Bank statements and tax returns are usually sufficient. Your credit score matters more than income verification for these. Here's your preparation checklist. 1. Set up a separate business bank account if you don't have one. This is non-negotiable for serious income verification. 2. Use accounting software to track income and expenses. QuickBooks, Self-Employed, Wave, or FreshBooks all work well. 3. Save every 1099 you receive. Keep digital copies organized by year. 4. Keep signed contracts for all ongoing clients. These prove income stability. 5. Generate a profit and loss statement at least quarterly. Keep it updated. 6. Build a relationship with a CPA. Even if you do your own taxes, having a CPA who knows your business can provide that letter when you need it. 7. Plan ahead. If you're thinking about a mortgage in the next 2 years, consider how your tax strategy affects your provable income. The freelancers who struggle with income verification are the ones who don't prepare. The ones who succeed treat documentation like a business asset. One final tip: over-document, don't under-document. When you apply for a mortgage or lease, don't wait for them to ask for documents. Provide everything up front in a clean, organized package. Include a cover letter summarizing your freelance business, how long you've been operating, your average annual income, and your major clients. This proactive approach signals that you're a professional who takes finances seriously. It reduces the lender's perceived risk before they even dig into the numbers. Being a freelancer doesn't mean you can't access the same financial opportunities as traditional employees. It just means you need to prove your income differently. Prepare your documents. Organize your finances. Tell your story with data. That's how you get the mortgage, the apartment, or the loan. If this was helpful, subscribe for more freelance finance content. We break down complex topics into clear action steps every week. As always, this is educational content, not financial advice. Consult a professional for your specific situation. See you in the next one.